What's up, guys? Today we're going to be looking at Progress Software stock. The stock is trading down about 3.7%. They reported earnings today. We got Q2 2025 earnings. And we're going to try to see the numbers here and understand why this company is trading lower in after hours trading. However, second quarter 2025 highlights, we got revenue of $237 million, an increase of 36% year over year on an actual currency basis and 35% on a constant currency basis. Annualized recurring revenue of $838 million, increased 46% year over year on constant currency basis. Operating margin was 16% and non-GAAP operating margin was 40%. Diluted earnings per share was 39 cents compared to 37 cents in the same quarter last year, so it's only an increase of 5%. So not a lot of growth in that earnings per share. However, impressive revenue growth at 36%. But it's interesting to see their cash from operations decline from $63.6 million quarter over or year over year down to about $30 million cash from operations. So it's interesting to see here. Earnings per share and net income growth is not very impressive at 5%. I do believe that's part of the reason why the stock is trading lower in after hours. We also need to take a look at their balance sheet as well, which they had a decline in cash and cash equivalents down from November 30th, 2024 compared to May 31st, 2025, down from $118 million in cash and cash equivalents to $102 million in cash and cash equivalents. Total current assets also declined from almost $369 million down to $325.6 million. Total assets declined by about $113 million. So it's interesting to see their total assets decline. However, we look at the liabilities. The long-term debt did decrease down from $730 million to $660 million. So not bad there, getting rid of some debt. That's a good sign for a company. However, it is interesting to see that their overall liabilities also decreased by about $113 million. So not too much room for concern there. However, you do like to see more cash on a company's balance sheet. It does show the overall health of the company, especially if they were to run into additional expenditures that they are not prepared for. So overall, it's interesting to see the cash decline. However, we look at the guidance as well, fiscal year 2025 guidance update. They increased their overall revenue guidance as well as their earnings per share guidance on a non-GAAP basis. So that's interesting to see. They did upgrade the guidance. They also are saying a net retention rate of 100%. So not bad overall. I think the big reason why this company is trading lower in after hours, though, is it's trading at 50 PE for a company that only grew their earnings per share 5% year over year. It's not really a PE you would see commonly with a company that's not growing at a significant rate. However, the revenue growth was pretty impressive at 36%. So I do think that's why you're looking at the market pricing the stock at 50 PE. However, that forward PE is still at like 50. So you're not really seeing a whole lot of the stock growing into its price to earnings ratio. So it's interesting. Overall, Seeking Alpha is giving me this a C- valuation, but F for growth. I do think that's part of the issue is the earnings per share is growing at year-over-year basis 5%. So I don't know. I don't know about this. 8 analyst ratings, 63% buy, 38% hold, 0% sell. You're looking at a median price forecast of $70 a share and a high price forecast of $83 a share. Let me know if I missed something, if there's something I'm not seeing with this stock. However, a 50 PE for a company that grew its earnings per share by 5%, not exactly something that I think is super attractive to buy at this moment. Let me know in the comments if you got value from the video, and please subscribe. Y'all have a good one.